All right, I think we're into, what, week 5 now? Something like that, golly. So you guys have coming up this week due, chapter 7 will be due. Also due on Thursday is going to be the payroll and operating expenses. I would like to be able to come around and see how you're progressing on those today after I finish talking a little bit here this morning, okay? So, plan on that, get that called up on your computer so I can have a look at it, would be awesome. Because they're due Thursday. Probably due next week, I'll do your first assignment for project 2, which is just going to be to choose a company, right? That you're gonna want to analyze, a publicly traded company that you're gonna wanna analyze. That's a pretty simple assignment. You just pick a company and write it down, put it in the Dropbox for me. And then next week due is going to be your sales forecast and your additional inputs. They're the 2 pages. So we're going to take a look at those today. I did want to make one comment. I know I sent out an email to that effect as well, but I comment on it too. And I corrected it was a chapter 6 assignment or something like that. It was frustrating for me in that I don't think anybody really got a problem incorrect, but those of you that got some point deductions, it was all simply because of mistyping in numbers. One I can remember is one example, somebody typed in 40,000 instead of 400,000, right? And so boom, this screws it up, right? Okay, and so my only caution there is, or admonition, I guess, is be a little bit more careful as you're putting in those numbers and whatnot, because one, it's frustrating from my standpoint to have to, I feel like I still have to deduct a little bit at least because you certainly got the problem wrong. 2, it takes me more time. It's pretty easy if I can glance at a problem and you got the right answer. I usually click on that square, make sure you got the formula in there, and boom, I'm done, away I go, okay? When I see the wrong answer, then I usually try to figure out anyhow what it is that you did wrong. I do that early in the semester anyhow. Later in the semester, I probably won't give you that courtesy. I'll probably just put in what the correct answer is and go on from there. But at this point, I like to show you maybe kind of what you've been doing wrong so that hopefully you can correct that and make changes that'll help you in the future. And sometimes those are the hardest things to find. When you've just simply mistyped a number, because I click on your answer and I see the formula and I say, geez, that formula looks correct. And then I got to backtrack a little bit and try to figure out what went wrong. So just be cautious, as you're doing those. It'll improve your scores. It'll make my life easier, okay, and on and on. So onward to sales forecast. This is one of those, there are some limitations to this program, and this is one of those cases where there's some limitations. I think if I were, if you had a product line that was way more broad than what most of you are going to have, this would really be limiting. So we have to make a few sacrifices. Sometimes, for most of you, this will be just fine. And what do I mean by that? Well, there's only 6 spaces here for product lines, right? And you might, even in a coffee shop, you could say, well, geez, I'm going to have black coffee, large, black coffee, small, lattes, cappuccinos, frappuccinos, scones, bagels. I'm going to sell merchandise. I could kind of go on and on, right? You could have a really detailed list here. And obviously having only 6 product lines is going to limit that list, okay? So sometimes we have to just make some assumptions, do some averaging types of things. Instead of being able, like if you had a shoe store, you might have Nike basketball shoes, Nike tennis shoes, Nike running shoes, on and on and on. You might have to just kind of combine them and say, Nike shoes, average price, $120, average cost, $80, okay? that's kind of how you'd have to look at this a little bit. So if you have some problems, with your particular business, I don't think anybody in here chose a business that they should have any problems with that. But if you do, let me know. I have adapted this in the past to make it a little bit so you could add some extra ones. It gets to be a little bit complex. So we'll do it within the limits that we have here. Okay, so let's just say, for example, the product line is just your description. So I'll use my shoes as an example, right? I just type in shoes, right? Okay, my units, and a lot of people think this is a numerical thing, and it's not. Okay, this is how do we sell shoes? We sell them by the pair, right? Like type. Okay. If you were selling, shampoo, you might sell it by the case. Okay, if you were selling, different products, you might sell it in units like that. So that's the only thing. Again, this is just a descriptive thing. It doesn't really have anything to do with the quantitative side of things. Okay, sales price per unit, that's when we get into some of those. And I said, what's a pair of shoes sell for? Maybe 120 bucks, 130, 140, I don't know. Okay, kind of look it up. Okay, again, I'm not pushing you in this class to do tons of research, but you ought to be kind of close maybe, okay, in terms of what the sales price should be. You can also look up the typical cost of goods sold for something like shoes. And I'm thinking that the cost of goods sold is typically around 60% with shoes, if I'm not mistaken, which would put you at 72 bucks. I'll put 75 just for the heck of it. Okay. So that automatically then tells me what my margin per unit is. It kind of calculates it. It brings it down here. So my first product line is shoes, and it's down here. All I have to do now is go through here and predict how many per month I'm going to sell. This is where some seasonality could come into play for some of your businesses. There are certain businesses, of course, that are going to do better in certain seasons versus others. And so you may be a little bit cautious about that. If my business doesn't really have a lot of seasonality. Yeah, Jake, question. So what if my business we'll get to that. Let me finish with the shoes, and then we'll go back and we'll do the service then. Okay, so we got pairs sold. So I just need to estimate now how many pairs I'm going to sell per month, right? In at least the first month, whatever month I choose to be the first month. Okay, I'll sell 20 pairs, right? It automatically fills that in. Marty, question? So what if it's like snow season? Yeah, then. Yeah, yep, you very well might. If month one is January, you're not going to sell a lot of sandals, right? And probably February and March, at least in Montana, you're not going to sell a lot of sandals. April you might sell a few. May they're going to pick up probably, people getting ready for summer and whatnot. Okay, so yeah, you would certainly adjust for the types of seasons that you might have depending on the business that you're doing, right? There's some businesses, if you had a lawn mowing business, shoot, guess what? you're gonna be busy, and you might start doing some yard cleanup or something in March. That might be one of the services you sell, and that might only be in March and then again in October, right? And then you might have, April, May, June, July, August, September that you would actually do some lawn mowing, and the two ends there, April and September, would be quite a bit less than the other 4 months in the middle, right? So, yeah, so make those kinds of adjustments. Again, I'm not looking for perfection here, just kind of think it through a little bit and put some numbers in that seem realistic. So again, I'm just selling 20 pairs of shoes. If I thought that I was going to be consistent year-round, then I can just drag this over, right? Boom, I'm done. So for my shoes, I sold $28,800 worth of shoes. My cost on them was $18,000. My gross margin then, or gross profit for my shoe sales, is $10,800. Okay. So to Jacob's question, what if I'm selling a service? Let's say it is snow removal. I might sell that service by the hour. Okay, I don't know. You know, you might sell it by the square foot, you might, okay, however you decide to do it, but I'm gonna say I'm gonna sell it by the hour, okay? So what am I gonna charge per hour? Um, you know, if I'm just shoveling by hand or whatever, it's just me personally, I might charge, what, $20 an hour. So I just put 20 in there. What's my cost? In that case, I got zero cost, right? Okay, so I just put zero. So my margin is I'm gonna be making $20 per hour, $20 per unit, whatever it may be, right? Okay, you know, I might if I had maybe I was doing parking lots and I had some equipment or whatnot in there, you know, you could attribute a little bit of cost maybe to fuel and those types of things. But be careful if you've got something like that you don't double that up with your operating expenses. I'd probably just as soon you leave your cost of goods sold there as zero if you had something like that. And let's just put that in your operating expenses. That's gonna be a part of your supplies or maybe vehicle maintenance, you know, cost types of things that are in operating expenses. Marty? Yeah, fuel again, I'd probably prefer you just leave it off of here and have that in your operating expenses. You could argue, the important thing, you know, from a tax standpoint is that, you know, that's obviously one of those things that's a deduction. It's a legitimate expense. It doesn't matter precisely where it's at, you know, just so we recognize it. Yeah, Samantha? Just as many as you have. Yeah, many of you might just have one. Okay, you're all gonna have at least one, but some of you might have only one, and that's fine. Okay? And if you're doing coffee, you know, let's say you got 3 different sizes that you're thinking you're gonna sell, uh, you might just average that out and say, well, I might have a large that's 250, a medium that's, you know, $1.75, and a small that's $1. You know, so I'm gonna be average at $1.50, and my cost is gonna be, you know, 3 bits or something like that. 3 bits. That'd be 37.5 cents. Wow. Okay. Questions about that? Okay. What's that? Oh, so then the same thing. So I've got snow removal, I've got hours. Okay, I'm gonna do that. I'm gonna do quite a bit in January probably. So think through, let's see, what if I had to do 40 hours a week in a month? You know, there's a little more than 4 weeks, so that's 160, but there's more than 4 weeks to a month, so that might be 170 hours, right? So I just plug in my hours in that case. So again, I got January, February's gonna be busy. You know, March maybe a little less busy, right? April probably not at all, but you might get 20 hours freak snowstorm, and then you're gonna have to come all the way back over here to November and December. November, you know, again, you might not have much, but December could get, you know, busy again or something, so you kind of make your estimates there. Okay. Any questions about that? And then it automatically fills it out. Here's what I want you all to do when you get done with it. Take a look at the bottom here and see if that looks kind of legitimate, okay? You know, if you're doing a snow removal business and you get down here and it says your gross margin's $1 million and it's just you, you're probably overestimating a little bit, right? Okay? So you know, when you get done, take a look at it and say, is that kind of realistic? You know, am I in the ballpark here? Is that something that makes some sense? If you were manufacturing something too, there is actually, I don't think anybody in here picked a business where they'd be making something. There is yeah, there you're gonna have to make an estimate just on your own. If you're manufacturing, there's a little worksheet back here that has a cost of goods worksheet where you estimate the raw material that goes into it, you estimate the labor that becomes a cost of goods sold versus, you know, salaries and wages, okay? So, yeah, on the farm side with yours, I think it's better just to kind of, you know, estimate what the actual cost may be into that. Virtually all of yours is going to be on the operating expense sheet. You know, you may have the little things that you're selling the plants in or something, I don't know. Because you're gonna cut them and, you know, so you're not gonna have much for the cost of goods sold probably for the microgreens, right? Yeah, yeah. Not much, if any. Um, Guess what? Years 2 and 3, it just fills in for you automatically. Now, you may want to adjust this growth rate, and that's fine. If you think 10% is too high and you want to go to 5%, you can sure do that. Oops. You know, if you think 10% is too low, you can change to 20%, right? And then it'll automatically adjust for you. So it makes years 2 and 3 pretty darn simple, right? You can, you know, these ones are gold, so you could make some changes in here if you wanted to down in here. But for most of you, I don't think there'd be any reason to do that, so, okay. Just change your growth rate if you feel like you want to change your growth rate. If you have 10% is fine, you can leave it at 10%, nothing wrong with that. In this tab here, and I probably end up, this one's a simple tab, really. There's not much to it, but I think I end up doing more corrections because of this tab than any others. So please just kind of pay attention as I go through this a little bit. So starting at the top, we have accounts receivable, okay? For many of you, if you have a coffee shop, are you going to have any accounts receivable? Probably not. People are going to pay you with cash or a debit or credit card at the time of purchase, right? You know, I suppose there's some coffee shops that they might be near a school or something, and maybe they have purchase orders or something, but that would be pretty rare, okay? So I'm not sure that you'd want to add that complexity, okay? But you might, okay? Now, if you had an automobile repair shop, are you going to have some accounts receivable? Yeah, probably. You know, again, you might do some service work for some other businesses or things like that. You know, the normal Joe, if I bring my car in, I'm probably going to pay you when I come pick it up. But I might be, you know, XYZ company down here that's getting my car fixed, and I want to get a bill and pay you next month or whatever the case may be, right? And so you may end up changing this. So instead of getting paid within the 30 days or basically immediately, instead of getting 100% there, let's just say I get 60% there, okay? Then between 30 and 60 days, most of the rest of everybody's going to pay me within that next 30 to 60 days probably, so I'll get 30% there. More than 60 days, yeah, I'll pick up most of the rest of it. Let's say I get 7% there. Now it's calculated this allowance for bad debt at 3%. That may be legitimate for a business like a car repair shop or something, right? That there's going to be a certain number of people that you just don't end up collecting on, right? Or they write you a bum check or something like that, okay? And so you make this allowance for bad debt. That may be a reasonable thing. Again, for many of you, you're not going to have these accounts. You probably will, Marty, right? Because you're going to be selling to a lot of end user restaurants and whatnot, and so they're going to want an account. They're going to want to pay you at 30 days or whatever, okay? So think that through on your business, you know, just depending on your business. You know, Jacob, they're going to pay you right away, you know, probably when they pick up their car, right? Or you're not going to give them their car. So, yeah. So think it through for your own particular business, you know, and away you go. Yours might be, you know. Yeah. Yeah, could be, or, you know, mom forgets to pay the bills one month, and so you get it a little bit late or something, yeah, so think through your own business and how that's going to be. You know, even some retail businesses, you might make this 98% and let the allowance for bad debt be 2% just in case you do get that bum check or something every now and then. Bars, you know, they used to be famous for that. You guys are too young, but I can remember going to bars, you know, when I was younger, and somebody wrote a bad check to the bar, and the bar owner would post that bad check right there by the cash register and say, you know, this person wrote me a bad check, basically. So, you know, try to shame the person a little bit. So, okay, so think that through. It's got to add up to 100%. Sometimes I get folks and they think they're going to collect 120% of their receivables. Well, that's not going to happen. So it will add it to 100% as long as you do these three up here correctly. And then again, if you just want to copy that over to the next three, you can highlight those three, grab the little box there, drag it over, and I've got the same thing for each of those three. Basically the same thing on accounts payable. Think about, okay, are you going to have any accounts payable? Yeah, maybe not. For a lot of us, you're gonna buy things at the supply thing, and boom, you're just gonna pay for it. You're gonna get your stuff at Petco or something, right? So you're just gonna pay for it when you go get it, and so it's all gonna be paid within 30 days. The coffee shop, you might get billed for some stuff, and so it might be, you might pay for 75% within the 30 days, and the other, 25% between 30 and 60 days, right? Okay. So again, just think through your business, how it's going to operate. Put in some percentages there that you think sound reasonable. Doesn't have to be perfect. Line of credit assumptions. When we get to the cash flow, you're going to have a line that says line of credit. And that is if you have a business, and this is really common with seasonal businesses, our bank used to make a lot of money financing farmers and ranchers, right? Because they had operating lines or lines of credit during the summer because they needed them, right? And all this is saying here is, do you want a minimum balance in your checking account, right? Do you yourself personally, if your checking account got down to $1,000, let's say you put in $1,000 here, then if it fell below that, the bank would automatically advance you some money on your line of credit so that your balance would always be at least $1,000. You may want that. You don't have to. It can be zero. Okay, it doesn't matter to me. That's up to you. Interest rate, 8% is actually pretty high in today's environment. Okay, a good customer right now is probably getting closer to 4.5%, 5% maybe on a line of credit if they were a good customer. Okay, we get down to the additional fixed asset purchases. For most, if not all of you, you're not going to do anything with this. Okay, so think about it. If you think that in the first year you need to buy some more furniture and fixtures in month 7 or month 9, am I looking at furniture and fixtures still on that line? That's equipment. Okay, so I'm going to buy some equipment in month 9. I think I'm going to need a new photo processor or something, right, for $500. I could put that in there. Okay. Years 2 and 3, it just aggregates those, and so if I thought maybe in year 3 I needed a new vehicle, okay, that's this one here. Okay, maybe I got to go buy a used pickup for 25 grand. I could put that in there. For most of you, this is probably going to be nothing. It's not, we all hope that you're really successful and that you are going to have to need those types of things, but you don't necessarily need to project that here. So if you think you need it, fine, put something in. If not, I wouldn't worry about it. Okay, then here. Well, I did change this. Okay. Effective income tax rate. Why do I have zeros in all those? And I changed it. They used to have, I think, 20% or 24% or something. I changed it to 0. This was teaching moment. Why did I put that to 0? Okay. Teaching moment, because unless you are a C corporation or an S corp, no, I'm sorry, unless you are a C corporation, period. Okay, C corporations are the only corporations that actually pay taxes, right? Every other entity is called a flow-through or pass-through entity where the profit and losses flow through to the owner or owners, okay? So businesses don't pay taxes unless they're a C corporation, okay? Businesses don't pay taxes unless they're a C corporation. That's why very few small businesses are incorporated as C corporations. They may be an S corporation. That's a different creature, but they won't be a C corporation. Okay? Farms and ranches are different. There's some different reasons why farms and ranches choose C corporations. We could teach a semester on that maybe. Okay? So I changed that to 0, and I want you to keep it at 0. Okay, for that reason. okay? If you make a profit of $60,000, that's gonna show up on line 14 or something like that on your 1040, okay? And you're gonna pay taxes based on that. And you'll fill out a Schedule C if you're a sole proprietorship, probably an LLC, whatever, okay? I do want everybody, and if you have this open on your project, I do want everybody to change this amortization period in years to 1. This again is it's kind of a hang up for me a little bit, I guess, but they've got it at 3 as kind of the default. And my problem with 3 is that what it does is it's taking your startup expenses and it's amortizing those out over 3 years. Okay? That may be reasonable for some businesses, but for most of us, we're just going to take those write-offs in the first year. Yeah. Did you, can you go up and hit that review thing and unprotect the sheet? There you go. Unprotected, and then you should be able to change that to a 1. Yep, and then save that, okay. Most really small businesses, that's what you guys are doing, because I asked you to keep it simple. You're just gonna write those expenses off in that first year. And you're not gonna amortize your first year's insurance out over 3 years. To me, that just doesn't make any sense, and so that's why I kinda changed that, okay? You may be allowed to amortize those, and there may be some reasons for some folks to amortize those over 3 years, but it didn't make sense to me, so I wanna change that. Okay, that's it for sales forecast and additional inputs. Again, it's nothing too complicated if you think it through. This one's got a few things on it that, like I say, I end up correcting or sending back feedback on this fairly often, so hopefully you can get to this and remember everything we talked about, and you should be able to do it fairly simply. So, any other questions? You guys had some good questions. Are there any others that may come up here? Okay. I'm going to shut up then and let you guys go to work on Chapter 7's homework. And also, again, I want to come around and kind of see where you're at on your payroll and operating expenses.